Hi again, everybody. Back for problem 9-2B. This is comparing the three depreciation methods that are introduced in this chapter. They tell us that Waylander Coatings Company purchased waterproofing equipment on January 6th for $320,000. The equipment was expected to have a useful life of 4 years or 20,000 operating hours and a residual value of $35,000. The equipment was used for 7,200 hours during year 1, 6,400 hours in year 2, 44 hours in year 3, and 2,000 hours in year 4. So the first thing they want us to do is determine the amount of depreciation expense for the years ended December 31st, year 1, 2, 3, 4. Since it was purchased at the beginning of the year, we'll do full year depreciation. The first one we're going to use is the straight line method. Then we're going to use the units of activity method. And finally, the double declining balance method. Also determine the total depreciation expense for the 4 years by each method. And then it says also here for declining balance, only round the multiplier to 4 decimal places. So I'm going to put, this is what the table looks like in your homework. So you've got it split out by year, just titled depreciation expense under all three methods. So again, I'm going to put some stuff down here. The cost of the item, cost is a total of $320,000. The residual value, and that's the amount that we expect to be able to sell it for at the end of its useful life to the company, is $35,000. And remember, and then we're going to talk about it has a useful life. Useful life is 4 years, or 25% is going to be used every year, or let me put or 20,000 operating hours. So I'm just going to put 20,000 hours. Okay. So so when we're looking at any item, the depreciable cost, so the amount that we're allowed to depreciate, depreciable cost equals cost minus residual value. So here it is the 320,000 cost minus the 35,000 residual, which is going to give us a depreciable cost of $285,000, regardless of the method that we use. Okay, so we can't depreciate below this value unless we make some new calculations and decide, okay, maybe we can use it for another year. Then you can take it all the way down to 0. But at this point, we can't depreciate below 35,000. So the only, I spelled depreciable wrong. All right, sorry. Human error, operator error here. I try to do them so nice. Depreciable cost. So that's cost minus residual value. Additionally, it's important to remember that our book value equals cost minus accumulated depreciation. Whoops, all right, almost ran out of room. Remember, accumulated depreciation is that contra asset account that's used to offset the asset on the balance sheet. So book value goes down each year that we take depreciation as that accumulated depreciation account goes up. So I think we've got everything here so that we can start the three methods. So in the first method is the straight line method. So I'm going to move over here. I've kind of tried to change the camera angle so that you don't have to look at my back so much. So if we remember, if we're using the straight line method, so I'm going to put to calculate the annual depreciation expense, it's going to equal, and we calculate it using cost minus residual value over the useful life. And we're going to do that useful life in years. Okay? So we know, and with a straight line depreciation, it's an even amount every year. We use the same amount every year. So once you calculate out your annual depreciation expense, you don't have to do it again. You just make your journal entries each year. So here we've got our cost minus residual value. We have our $320,000 minus the $35,000, which is going to equal that depreciable cost of $285,000. I'm going to divide that by 4 years, and that's going to give me a depreciable cost each year of $71,250. Okay? So if we move over here, we can just put in for each year the same amount. We've got $71,250, $71,250, $71,250, and $71,250 for a total depreciation taken over the 4-year life of $285,000, right? So again, with straight line, your formula is this cost minus residual value over the useful life. And we get the same amount every year. And so that we've included in here. So our journal entry every year under straight line would be the journal entry every year is going to be depreciation expense for $71,250, and then we would credit accumulated depreciation for $71,250. And so if you wanted to calculate out the book value at the end of the first year, you would take the $320,000 and subtract $71,250 for it. So that's how you're going to calculate depreciation expense under the straight line method. The next method they want us to use is the units of activity method, and the only difference with the units of activity method is now we're going to use for the life 20,000 hours instead of 4 years. So we're going to calculate out the new formula over here for our units of activity method. So the first thing you need to do is you need to get depreciation expense rate per unit. In this case, it's going to be by hours, but the formula is still cost minus residual. But now we're going to divide it by the units of activity. So here we've got the 320,000 minus 35,000 divided by 20,000 hours. And because I want to save space on this sheet before I have to change it, that rate comes out to $14.25 per hour. Okay, So that's the first thing. And then for the second part, to calculate out depreciation each year, we take the number of hours used each year of the 20,000 and we multiply it times the rate. So we do have to recalculate every year. So to calculate out depreciation expense per year is going to equal units of activity consumed times depreciation rate. So I'm going to put that in here as we go. All right, so remember each year we're going to use that rate of $14.25 per hour. And then we're going to multiply it times the hours used during the year. And the problem tells us that in year one, we use 7,200 hours. So we multiply that out, and depreciation in year one comes to $102,600. Okay. Then in year two, we're still going to use that same rate of $14.25. In year two, the company consumed 6,400 hours. So that's going to give us depreciation expense for year two of $91,200. $91,200. Then in year three, again, we use that rate of $14.25. The number of hours used in year three was 4,400 hours. So that is a total of $62,700. And then in year four, the company used 2,000 hours. And that is a total of $28,500. And in this situation, we used all the $20,000 up in that 4 years, but that might not be the case. You might necessarily, let's say you're using half the hours, you're going to have a longer life for that asset. But for purposes of this problem, if you add up all of our depreciation expense over 4 years, still comes to $285,000, and the reason for that in this situation is because we consumed all 20,000 hours. Okay, so your journal entry is going to be different each year. So in year one, the journal entry is going to be depreciation expense debited for $102,600. In year two, you're going to have as the amount $91,200. So it's going to be different for each year. But at the end of the life, we still will only have depreciated the $285,000. So again, the journal entry remains the same. So like if I'm going to put here for our entry, if I just do year one, our entry is depreciation expense of 102,600 debited, and accumulated depreciation 102,600. So I'm going to pause this for a moment while I switch out this sheet of paper, and then we'll come back and do the last method.